Hi, this is Kirk with Forex Strategy Secrets. We're going to be talking about 15 trading secrets, and then we're going to talk about 8 trading strategies. So everything that we're going to show you today can be learned quickly. It doesn't take years to learn how to do these things. If you concentrate and focus, then hopefully we can share a few things that you could even take some things with you from today, whether you use our trading system or someone else's. There's some concepts here that you can apply to trading in general. So if you'd like to improve your trading performance, then this webinar may be a good one for you. Now, to get an edge in the market, you need knowledge. Now, there's all kinds of knowledge out there, but you need correct knowledge. There are places that you can learn all kinds of information about indicators separately, but they don't teach you how to use them together to actually make money and strategies. There's tools. Now, having other traders to trade with, that is a form of a tool. You're talking and collaborating with them. And then we have a scanner, and the scanner brings high probability trades to your attention so that you don't have to spend all your time looking. You can just determine, is that a good trade or is it late in being a trade? And then getting experience. So the thing you want to do is get a lot of experience in a short period of time, and we'll touch on that. There are 3 things that you want to do in trading, and one of them is make pips on a regular basis. And then you want to be able to keep those pips and then repeat the process. One of our good traders said he had a couple of bad trades and had lost a pretty good amount of pips, but then the market moved, and in the less than a 12-hour period of time, he made over 300 pips because a lot of pairs were moving and he took trades on several things. So, but he knew how to repeat the process. You can repeat it in small amounts of time. So we're going to show you what the 15 secrets are. And these secrets can be mastered by you. It doesn't take forever to learn how to master them. And so now we're going to go right to the charts and demonstrate these 15 secrets, and we'll come back and talk about them a little bit. So what we're seeing here is our nth degree trading system. And one of the most important things is being able to recognize a trend and then trade in that direction. Okay, so what we can see right here, we'll expand it out and so you can see a bigger picture. That is a trend. You can see there's a trend there. Well, how do you determine that? Now, a lot of people say, well, it's forming, this is on a 1-hour chart. They say you need lower highs and lower lows. Well, that's where this particular example starts sharing that with you. And so you have some trades going in this direction, but you missed out on some of the things that are over here. So look at this bottom indicator we have here. This comes with our course. When it's below the 0 line, that's the direction of the trend. Then there's another thing you want to look for. If it's red and below the 0 line, that's an impulsive move. If it's blue and below, that's corrective. Now notice what it did in the corrective. It started retracing, then it went impulsive again, and then here it's kind of back and forth, and then another impulsive move. So that's what you'd look at. Now I'm going to zoom out one click on my computer now. Let's look at the same indicator. It did pop above the 0 line right there, so you may have been wondering, but that's a corrective move. This is an impulsive move. That's impulsive. Now, this is corrective right here. But look at this. That's the trend right there. So when it went above that 0 line and below right there. So that's the trend going long. Now, that's a 1-hour chart. Now I'm going to go to a 15-minute chart just to illustrate that it will say, yes, it's an agreement for that trend, or no, it's not. Well, we know that between those 2 marks, we know that we're looking to trade long. We can see that there's a bigger trend going here, going short, but this is the one that we're looking at right here. So the only time you take trades here is if you're going long. So we go to the 15-minute, take some trades, go in this direction. Then it goes below here, so you wouldn't be taking any trades. This would be in the direction because it's above the zero line also. But right here, you wouldn't be taking any trades on this 15-minute because that's going against the trend on that larger time frame. So right here, going in the direction again. So there are some trades in there. I'm not saying they're big, but they're 10 to 20 pip moves. Then we have another one below, and then a nice one above. So you probably would not trade this retracement. You just trade that impulsive move going along. Then right here, the larger time frame says it across that line going short, and so you wouldn't be trading in that direction anymore. That's how you can tell a direction of a trend. It's a very simple way of doing it. It doesn't have to be complicated to determine the trend. You can pick your larger time frame. Let me look at a 4-hour chart on the same currency pair. Right here, this said to trade long on the 1-hour time frame. The 4-hour time frame said maybe not until over here. And then to go short, it said trade short starting someplace right here. See, that 4 hour is not as good as that 1 hour would be in this situation. Now, we want to know when that trend comes to an end. Well, I just showed you when it goes back across the zero line. Those are very simplistic ways or better ways of being more accurate, but that is the way to find the overall trend. The next thing is, how do you know when that trend's coming to an end? Well, I just showed you when it would go back across the zero line. So that you trade that direction, the trend's coming to an end. But there's what we call CDC. That's convergence, divergence, and congruence. Right here, price is going up, getting higher highs. So you'd still be trading that direction. The momentum's still going that direction. But right here, on the same indicator, this says, heads up, that trend is going to slow down or change directions. Slowing down means it goes sideways. And you see that it did eventually change directions. But you were made aware of that right over here. This is called divergence. If it were going short, then it would be called, this would be going back up to the zero line. That would be convergence. Convergence, divergence, and congruence. Congruence means that the momentum on this bar, on this indicator, is going the same as the indicator right here. So you can see that right there, that's congruent. So that's just an impulsive move, all going the same direction, and you can see that that's a good trade. Now, don't be concerned about, oh, you're looking back in history. Well, you can see this right as it's forming. Just learn to read the indicators. I'm going to move this chart clear over to here. Okay, what do you see? Right there, it's just starting to go across. So the next bar, it actually is across. So that next bar right there would be the bar say, oh, trade long now. That's above the zero line. That's above the zero line. They're all blue. That's the direction of the trend. And that's how you could recognize it as it's happening. So don't worry about that. I'm showing you things in the past, in the history. That's how traders trade, is they see things as they're happening, and how and when to exit trades. Okay, I'm going to show you some very simplistic ways of exiting trades. I'm not going to go to all the little time frames to do that, but I'll show you a couple. Let me zoom out here so you can see it. Let's say that we had taken a trade right there on that bar, right there at that time. Got into the trade. It moved 16 pips against us. I'm not saying this is a large trade, but I'm showing you how to look for exits. We'll zoom out, then you'll be able to spot them. See these moving averages when they crossed? And that's one way, just the moving average crossing. But if you get the moving average crossing and this indicator changes colors, right there would be your time to consider exiting a trade, and you only made 9-10 pips on that. Okay, let's zoom back out, and we see a trade entered here. Right here would be the exit signal. Same exit signal, and that was for 50 pips. Let's do this on a 15-minute. You took a trade someplace after that. maybe right there when it passed below those fractals. So someplace there you took a trade going short, plenty of heads up. You could possibly even enter clear over in here to get into that trade. What are the exit signals? Changes color. When this indicator changes colors and these moving averages, we call them hot lines, cross. So someplace right in there you would exit that trade and see that that's over 100 pips on a 15-minute chart. But the exit signals will be the same whether you use the 15, the 5, or the 1 hour time frame. Those could be exit signals. We have others, but those are some very simple ones that I can explain to you right now. So how and when do I exit a trade? Well, when the indicators start going, that got you into the trade, start going in the opposite direction. That's as difficult as it has to be. You don't have to do all these mystical things to be able to figure out how to get out of a trade. You can see it happening. Yeah, we're seeing in the past, we're looking at historical, but you can tell when this changes colors. That says, oh, get out of the trade. And so you take whatever the market's giving you at that time. Now learn which time frames to trade and when to trade them. If you're able to sit in front of the computer, we have strategies that you can use the 15, 5, and 1 minute time frames to pick up a lot of trades for between 10, 15, 20 pips. Or if you're not able to sit in front of the computer, you might be trading the 4 hour and the 1 hour. And that's knowing when to use the different time frames. The patterns are going to be the same. So one of the things is you want to recognize patterns. And so I'm going to circle this pattern right here and make it big enough so when we go to the 4 hour chart, you can see a pattern forming there. Patterns going long, impulsive, corrective, impulsive. Happens on the 4 hour, impulsive, corrective, impulsive. The patterns are the same, so you decide which time frame and that you want to trade and what time of day you want to trade. Now, I mentioned that an individual made over 300 pips in 12 hours. Well, the pound pairs were moving. So let me just go to the 1 hour chart and I'm going to go to some of the pound pairs. See this big move right here? That was over 100 pips right there. He got in and traded that on at least 2 to 3 currency pairs. Currency pairs. They're all pound related, but that's what was moving. And so that's where he made his 300 pips in a short period of time. So that's how you trade more than one currency at a time. You find if the pound is moving, then trade other pound pairs. If there's news on a currency pair, like there's your euro is having news on it, maybe you trade on the several euro pairs. If the Aussie or the New Zealand or the Canadian, if they're having news, check out the others. So there's the US CAD, the pound CAD, and the euro CAD, and the CAD yen would all be candidates to trade. So that's how you can maximize some profits by trading more than one currency pair. When does the market have the highest probability of a trade? Well, that's when there's some news going on. There was news that triggered this, and there was news that triggered this. So you learn to trade around the news. Go to Forex Factory. They have a news thing telling you what the news is and when it's going to take place, and then wait until it decides which way it's going to go, and then trade in that direction. Get your bias from the news, and then trade the technicals to confirm that bias. How do you trade while working a full-time job? Well, if you only have an hour to sit in front of the computer, there's 2 things you could do. One, trade the 15, 5, and 1. We have strategies that people are making 50 to 100 pips a day using just those time frames. Then we have other people that are saying, well, I'm only going to look at the day, 4 hour, and 1 hour time frames. And you get a signal in a 4 hour. Well, if it's a good signal and you learn how to recognize those, it'll be there for 4 hours. And you can see in this case, this was on the 1 hour, but it was 9 time frames. That's 2 4-hour periods. It turns out you can actually see 3 periods of time that it was going in that direction. Is it above the zero line? Yes, it was. So you may or may not want to use to take that, but when you look at the 1 hour, for sure, you could have taken something right there. But let me mark this 1 hour and go to the 30-minute. See that 30-minute time frame, you could be starting to trade clear up there. So you can find the direction of the trend using just knowing how to use the different time frames. And we talked about chart patterns, but here's the one thing that most people get hung up on, and that is trading with emotion. Be mechanical. If you're trading emotionally, you're always going to question and second guess yourself and not take trades and take trades that are bad. And occasionally you'll get a good one and you can get really high and you're just so excited and you think you're a great trader, but then you can't repeat it for 2 weeks because the trade you took, you were lucky. So just learn how to recognize patterns and trade the same way every time. That helps to take the emotion out of trading. And if you focus and you're consistent, find these patterns on any time frame and look at the news to find out which direction the trade might be going. So allow your winning trades to run, and if you have a losing trade, learn when to cut it off. So you don't need to set your stops out a long way. One trader in our, we have what we call a PIP club, and he took a trade. He told us that he'd entered a trade, and it was going short. And then after he closed it out for 22 pips in just a matter of a few minutes, he said, I only had a 6 pip stop on that. But he timed it. He knows how to time it so well that he only risked 6 pips to make almost 4 times that much, 3.5 times his return, his ratio. So learn how to stop your losing trades from going against you by tightening your stops. But if you have good entries, you don't have to worry about how far it draws down on you, because you can see if you take trades like this, then you have a nice trade right here. That's called a saddle right there. You took a trade right there. It may have retraced, depending on whether you took it as soon as it opened up or after it had been going a little bit. That only went against you 8 pips, and then it went up and gave you a nice trade. Go to the jump start and learn how to simulate trade. Do simulated trading. You find the trend. I've shared with you some things that you can do. You say, okay, the direction of the trend is 1 hour when it goes below that zero line right there. I'm going to put this anchor over here to show you a little highlight of it. Okay, that's what you're seeing. It went below the zero line. That's your key right there. There are other triggers that you can find, but that's the key that we've been talking about. And then you can go to the smaller time frame. You know which direction you're trading now. And so you say, okay, I'm going to only take a trade going short. Well, right at this particular point, if you'd taken the trade, it actually went against you about 10 pips. So you decide how you're going to do that. I'm going to scroll over now and see when would you enter this trade. Closed higher than it opened, but the next bar closed lower. So you may say, well, I'm going to wait till the next bar closes. So right here, look at this. This is another technique in our course. It's called off points. It only deals with this one indicator. Things were going down in the direction of the trend, and it started going back up. So you want to wait until this indicator maybe starts going in the same direction as the market. See, now right there, everything is going blue, so it's retracing. This on a 15-minute, the 1 hour said it was going short. Okay, right here, you can start thinking about trading short. It passed those fractals. That was red, and that was red. And this was going sideways from the previous one. So right in here would be a time you'd want to consider entering the trade. See, that's timing your entry. So you can see that the market did give you some moves based on these time frames. That's what you would have received out of the market right there. Let's go back and look at the 1 hour now. Does this keep on going? I can't remember. Overall, it looks like it still keeps on going, but let's go across and see. Well, see, it started ending. Well, what did you see? The exit signal right there on this 1 hour, there was an exit signal right there. Remember when we talked about the color change and these hot lines were changing directions? Let's look at the 15-minute color change, hot lines cross. So right in here would be your exit signals, and you can see those as you're trading down. So that was a rough explanation of simulated trading. Watch those videos and then learn how to do that, and that will get you up to speed very quickly. A couple of other things I want to share with you. We talked about convergence, divergence, and congruence. That tells you when a trend is going to come to an end before it crosses the zero line. There's a technique called first and second legs. There's the beginning, that's the confirmation of a first leg. Even though it has already started, that confirms on this 15-minute, that's the first leg. And this is very close together. There's confirmation of a second leg. But in between the first and second, you're always going to get a retracement, which this did. Very small, but that's what it did. Let's see if I can find one that confirms you're in the first leg. First legs, yes, you can make profit, but don't expect a lot. And that was a small profit there. The second leg is, that confirms that's the second leg. But if you haven't had this retracement and you take the trade, right when that opened, you're going to get that retracement. Then you can either stay in, take a loss, and get out, but then that's when you get your confirmation it's going short. So you learn how to trade these first and second legs, knowing there's got to be a retracement between the two of them. This is divergence right here. Right at that point, that was the beginning of the first leg, it was divergent, so it told you that you got two signals telling you that that was the direction it was going to take. Worst case scenario, it was going to go sideways, but it had a nice little move there. How do you sweep the trend? These are strategies in that you take a trade here, you can leave the trade on, take the retracement, and knowing that it's going to give you another trade going down right here. So if you put a trade here, leave it on, another trade here, you close them both out. When the exit signal hits down here, then that's sweeping the trend. You get the trade is moving in a direction, and there are several trend directions. Comes down, you add on to it there, you add on to it there, you add on to it there. If you don't like it because that's a counter, a corrective move, you could at least add on over here for 13 pips. You could add on over here for another 13 pips, and then your first trade came up here someplace. The first trade stays on. The second trade could stay on, and that's how you sweep a trade, is you keep on adding trades in the direction that the trend is going. We call it a blue light special. It can be, but it's just two indicators being the same color, even though we have red and blue colors. We call it blue light special because that helps you to get into the trade earlier. Right there. When that changed, and that is the same color. When those two are the same color at the same time, that's a blue light special. You see how early that got into that trade coming out of this little correction? That's what a blue light special is. Here's an example of a camelback. Notice that the divergence and convergence, the price is going higher and the momentum is going lower. In this case, the price is going lower and the momentum is going lower. That's congruent. That means the market's moving the same way the indicator is doing. And when you see this indicator getting closer to the zero line and they're going the same way, that's congruent, but that's a camelback. If you ever noticed a two-hump camel, always the second hump, or the one towards the rear end of the camel, is smaller than the front hump. And so that's why we call it a camelback. Here's a trade, and we call it a candy bar trade. And it can happen going long or short. I'll use this as an example. It's when there's already a trend established. It does its retracement. And right here, when this passes below, well, it has to pass below this one over here. So this would be where you would be entering that trade on that candy bar. On this one, you would enter it right there. Now going, see, this is a little short camelback or a candy bar. When it makes a retracement and it comes out, and the bar that goes shorter closes below, so that would be a candy bar trade right there. Here's another candy bar trade right there. It triggers it, and this when it passes back below it, that lets you know. So if you look at that in the course material, you'll get the details of how that works. If you do this one thing that we've talked about, you're going to always be trading in the direction of the trend. It's trading in the zone. Okay, the zone is right here. That is the same color as that for a period of time up to right there. That's the zone. So if you were trading that direction, you would have a high probability trade. Well, there's also a zone going short. It starts right there, and that's a little bit of a zone right there. Retracement, then it starts in a zone again. So you get those two indicators going in a zone, then you're trading in the zone. Okay, let's look at it now based on the 1 hour. You find the zone, which is a way of finding the trend. Another way of finding the trend, see how that we talked about a blue light special? Well, that's the beginning of that zone on the 1 hour. And that's the same color, that's the same color, that's traded in the zone. Now, I'm going to move this, we call this the anchor, move it back over here. Now we're going to go back to 15-minute. Okay, that's trading in the zone. So anytime you had things going short, you would then be trading the direction of the trend. That's how you trade in the zone. This is a little concept. See a trade set up on a smaller time frame, you can what we call salt your trade. That's search all larger time frames. So if you see a setup on a 15-minute, to confirm that, you can look at the 30, 1 hour, 4 hour to see if that's the right direction. And it goes into this zone trading concept, impulsive moves, but you want to confirm it on the larger time frame. And salt your trade is if you see a setup on a 1 hour time frame, go to the smaller time frame and search all lower time frames. And so that's a good way to salt your trades and confirm that that's the direction you should be trading. Then create watch lists. If something's almost set up but not quite, keep an eye on it. And then when it gets set up, you can easily confirm it. So we've talked about a lot of information here. And now I'm going to review these quickly. These are the 15 secrets written down. Learn how to recognize a trend. We showed you a couple of different ways there. Learn how to recognize when the trend is coming to an end. A couple of ways there. The convergence, divergence, and congruence, and when that one indicator goes above or below the zero line. How to find high probability trades. That's when there's news going off and or there's indicators, more than one indicator pointing in a direction. Learn how and when to exit trades. We talked about exit signals. Which time frames to trade. That depends on your style. One individual said, well, I can't look at the chart very much, and so I'm adjusting trading the larger time frames. He does very well at either the larger or the smaller because the patterns are exactly the same. Trade more than one currency at a time. That's how you can maximize your profits, and that you can do that by when the news is going off on a particular currency pair. And the highest probability trades to get a good move is when it's around a news time. When you're working a full-time job, If you have an hour, you can trade those really small time frames and pick up a few pips, or you can just concentrate heavily on the larger time frame. When it sets up, then you take the trade. So there's two ways of doing it, but you can do it when you're working a full-time job. You get a signal, it might be an hour before you get to the computer. If you're looking at the larger time frames, many times those signals are still going to be good, and you just learn how to recognize when they're fresh when you get to the computer. And the chart patterns. The patterns are the same on larger time frames as they are on smaller time frames. You just have to learn how to get the concept. Larger time frames, the patterns will provide more pips. Smaller time frames happen more often for fewer pips, but you'll get regular pips either way. Control your emotions. That's become mechanical. Be consistent, doing the same thing on every trade. You figure out a way that you like to trade and it's profitable for you, keep on doing that same thing. Don't try and reinvent the wheel because you saw someone else do something different. That's a big problem. You see, well, I'm learning how to do this and I got good at it, but this other guy's really making a lot of money, so I'm going to learn his method. And then you hear another one and you keep on jumping around to different traders. Find something that works for you and just stay with it. They stop your losing trades from going against you. Some people say, well, it's 100 pips against me. I don't want to close it now, so I'll just leave it on. After it gets 300 pips against you, they finally close it because they can't stand the pain anymore. What if you'd stopped it when it was about 20 pips or 50 pips instead of 300 pips? So don't let your losing trades run against you. That's what wipes out your account, loses your confidence. Let your winning trades run. If you close your trades too soon and you keep records and see that, then that's the time that you need to be willing to be patient and stay longer. Keep some records and some journals so you know whether you're getting out too soon or not. And this is the 15th one. This is how to get 1 year experience in 30 days. That is simulated trading. Learn how to do that. Learn the concept based on what Jumpstart teaches you, but you can apply it to whichever trading system you're using, ours or someone else's. This concept will help you to learn the system much more quickly. So why does our method get results? The best thing about Forex Strategy Secrets is that our system can work on all currency pairs. The strategies can be implemented fast. For many of our students, you can get results quickly. You don't have to learn the whole system to be able to trade. You catch one or two things right early on and just do those, and then you can build upon that so you can get results very quick. Our methods are scalable, meaning that you can grow quickly. You don't have to know everything before that you can start getting some good results. It allows you to work less, have more fun, and enjoy life. All our trades can be done in 5 to 10 hours a week, and you'll be able to get tremendous results. The strategies are repeatable. It means you can do the same thing over and over again. Once you've implemented a strategy that you like or you've found one that you like, it's easy to repeat it on a day after day basis. Will it happen the same on every day? Find strategies? Maybe not, but it will happen several times throughout the week. If you're using the larger time frames, smaller time frames, it'll happen several times a day on several different currency pairs. There are over 8 strategies to choose from, but just pick one or two of them you really like. Maybe you like the candy bar trade, or maybe you like the zone trade. Maybe you say, well, I just want to use the blue light specials. There are multiple signals to help you find the high probability trades. You can pick one, and once you see that and say, well, I can use these others. They set up about the same time. And so now I've got two things to look for instead of having to just rely totally on only one. And there are multiple tools to help you manage your trades. And we talked about how to know when to get out. You can do it on different time frames, changing the color or the hot lines crossing. So you need to become a disciplined, mechanical, and be consistent. That will give you the confidence, and then you can become a good trader. You can become a disciplined, mechanical, consistent, confident trader if you build upon each of those steps. So let's look at the 8 strategies. We talked about them, but let's list them. There's this CDC, Convergence, Divergence, and Congruence. That tells you when the market is possibly coming to an end. It's either going to go sideways or it's going to rest and then take off again. Depends on the time frame that you're looking at. Larger time frames, probably it's going to be a change of direction. Smaller time frames, it might just be a little correction in a trend. There's the first and second legs. First leg is going to give you some profit, but there's always going to be retracement. When you get that retracement, then the second leg is going to be the most profitable. Sweeping the trend. As the market moves, it impulse corrects. There's little moves in there, and if you took trades on each one of those, you would get a lot of pips. There's a blue light special when two indicators are the same color. That's a good sign that it might be time to consider trading, analyzing it. If it's on a larger time frame, well, time it on the smaller time frame. Spot a camel back. That tells you the flow of the market. And use the candy bar. This is a sweet trade. That's why we named it candy bar, because it's coming out of a retracement in a trend. That's why it's so sweet. That's the most profitable trade, the highest probability trade that you can find once you learn to recognize candy bars. Trade in the zone, that means you're trading with the trend, and I got the high probability of getting a good trade. We didn't talk about mega trades. That's just trading ways to spot possibilities on larger time frames. Salt your trades. We talked about salting trades. Search all lower time frames. Search all larger time frames. And then create watch lists. This means something's almost set up, it's not quite there, but then you want to say, when that happens, then that's when I want to get into the trade. So what else is there? We have 21 trading labs. This is the questions were answered that people were asking us about trading. And we had webinars. There's 21 webinars that are included in answers to questions that you would commonly have. 2 acceleration coaching webinars. We have a PIP club you can attend 3 days a week and find trades and hear people trading. And that's a great way to collaborate with other traders. There's the FSS Fibonacci course. Fibonacci course, we use it to find retracement levels and extension levels. Once the currency pair has been in a move and it's doing a retracement, then when it comes out of that move, where's it going to go to next? The Fibonacci gives you points to consider where they take profit and the stop losses might be. Then we talked about the 8 strategies, and we have a bonus. Now this is for this webinar only. We're offering the Norwood Strategy Scanner free for 1 month. And you come to the PIP Club, you'll see how the scanner works and how it brings trades to your attention, so you don't have to find all of those trades. And if you were to buy everything at a retail price, and we've added it up, and it came to about over $3,900, but we've sold it many times for $697. But for this webinar special, I didn't ask Jed about this, so this is something I'm just offering. I'm giving it everything you've seen, the Nth Degree Plus, the 8 strategies, the Fibonacci course, our 21 trading labs for $497, and a bonus of 1 month of the strategy scanner. I would suggest you don't ask to have the scanner until you've gone through all the videos and the course material. Then the scanner will make sense to you. And so that's a fantastic value. So that's the scanner costs $100 a month. It's a subscription product, and you're getting a reduced price and the scanner for a very good price. So this is the link. You can write this down, and you're only going to get part of the course. So you would need to send me an email, or anyone that gets it in the next a few days. Then I'll have to go in and give you the other materials, because this link will only give you a portion of it. Otherwise, I don't have a. Otherwise, you'd be paying a higher price to get all of the things. And so, if you have questions, here's a way to contact us. Jed at forexstrategysecrets.com. We both answer that email, and then we have a line if you want to talk to us in person.